I think the metals are going higher. We've said that all along. I thought that we'd see 2,700 in gold, and we're going to see probably 2,800 in gold. I thought silver we'd see 35, which I think is pretty much a foregone conclusion. I think that a lot of people realize that you may need these precious metals as a concurrency. I think we've seen the Fed has made a dramatic mistake by cutting rates. And for those who don't understand the rate system, they didn't cut rates for you, the consumer, they cut rates for the bank. The lending rate is what the banks borrow at, and then the banks make money on the difference between what they borrow it from the Fed from and what they lend it to you. So we're basically double financing. We're financing the government and the Fed, and then we're also taking the loans out, so we're financing them on both sides of the equation. It's not a very good deal.
Spot gold continues to trade comfortably around the $2,740 mark, reflecting a marginal increase for the day. The yellow metal initially gapped lower at the beginning of the week due to renewed demand for the US dollar. However, the dollar's trajectory shifted as market sentiment improved, which limited gold's upside potential during the American trading session. Meanwhile, silver is holding on to gains above $33.50 but faces challenges in breaking past the $34 resistance level. The price of silver is currently trading at $33.79, showing a modest increase of 0.30%. Despite its bullish stance, silver has yet to surpass its recent peak of $34.01, which opens the possibility of forming a bullish harami candle pattern. Todd Horwitz shares his outlook on the market, suggesting that while a correction may be imminent, the overall trend for precious metals remains positive. He predicts that gold could reach $2,800 and silver could hit $35 as more investors recognize these metals' value as alternative wealth stores. The upcoming week is pivotal for the Federal Reserve, as decisions made during their November 6th and 7th meeting will significantly impact monetary policy. Central bank policymakers are weighing the possibility of another rate cut against a pause in their tightening measures. Two critical reports on inflation and the labor market will be released this week and could sway the Fed's final decision. Many traders align with this expectation, pricing over a 90% chance of a 25 basis point rate cut at the next meeting. Horwitz also critiques the Federal Reserve's approach to rate cuts, arguing that such moves primarily benefit banks rather than consumers. By lowering the borrowing rate for banks, the Fed enables these institutions to profit from the differential between their borrowing and lending rates, leaving consumers to bear the brunt of the impact. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Trying to time it is ridiculous, but we are extremely overbought. And there's going to be a pullback. Now, again, you have to make the decision. Are you a trader or are you an investor? And those of you who are buying gold should not be buying the paper gold. That's what you use to trade with. If you're buying gold because you have the same concerns I do, which is that I may need it as a currency, then you should be buying physical metals and not buying the paper because, again, I've said this to you before, Elijah, I don't think there's enough paper in the world or gold in the world to cover the amount of paper that is written. But I would certainly expect a pullback and will certainly look for a paper short position sometime soon here, probably not today, but certainly sometime in the very near future because, again, markets cannot continue to go straight up. We've seen pullbacks in equities, even though they've gone pretty much straight up, but there's opportunity, and that's what you're deciding. Are you investing or are you trading? If you're trading, then you want to look for an opportunity to sell some paper gold, but that has nothing to do with the physical metals that you're holding. I think the metals are going higher. We've said that all along. I thought that we'd see 2,700 in gold, and we're going to see probably 2,800 in gold. I thought silver we'd see 35, which I think is pretty much a foregone conclusion. I think that a lot of people realize that you may need these precious metals as a concurrency. I think we've seen the Fed has made a dramatic mistake by cutting rates. And for those who don't understand the rate system, they didn't cut rates for you, the consumer, they cut rates for the bank. The lending rate is what the banks borrow at, and then the banks make money on the difference between what they borrow it from the Fed from and what they lend it to you. So we're basically double financing. We're financing the government and the Fed, and then we're also taking the loans out, so we're financing them on both sides of the equation. It's not a very good deal. It's hard to say, Elijah. We have such a little action right now. The markets have been extremely slow. You've got the plunge protection team, which is always on duty right now. I think a lot will be determined after the election. I've said this before, so I'm not going to stop now. I think we're looking for a 50 to 70% haircut. I would think when we get to the election, if it is Harris, I think the markets just tank. If it's Trump, I think they rally first and then they tank. I think that they're extremely overbought. We're really in a bubble territory that has been inflated artificially by the Federal Reserve, by their monetary policy, by the overwhelming amount of money put in. But the lack of participation is what you really want to look at, because we're not seeing many participants in the market, which means that the only ones who are really benefit are those who have. The middle working class, they're not even able to fund their 401ks right now. And that's silly, because basically that's an extra 4 or 5% that you're getting paid if you would fund your 401k.
Wall Street experienced a notable rise on Monday as investors eagerly awaited earnings reports from major tech companies and approached the final stretch before the U.S. presidential election on November 5th. The Dow Jones Industrial Average had increased by 272.42 points, or 0.65%, reaching 42,386.82. The S&P 500 followed suit, gaining 23.64 points, or 0.41%, to settle at 5,831.76. Meanwhile, the Nasdaq Composite climbed by 100.38 points, or 0.53%, to 18,618.98. This week, the spotlight is on technology stocks, particularly as 5 of the Magnificent 7 megacaps are set to announce their earnings. This anticipation comes after the Nasdaq Composite defied a downward trend on Friday to close near record highs, highlighting the resilience of tech stocks amid market fluctuations. However, Todd "Bubba" Horwitz cautions that if the market fails to maintain this upward momentum, it could signify a broader shift away from the foundational free market principles that have long underpinned the U.S. economy. He warns that such a decline may lead to an alignment with more centralized or restrictive economic models akin to those employed by China's Communist Party. This perspective serves as a reminder of the delicate balance in maintaining a thriving free market system, especially amid economic uncertainties and political changes. Let's get back to the interview.
If the stock market stops being positive 8.5% year over year, we have a much different country. We are no longer the United States of America. We're then the Chinese Communist Party. There is no longer the free market system. I mean, we don't have such a free market anymore anyways, but we are still the freest market in the world. And if that stops, then the markets are immaterial, because again, then there's no reason to believe that they're going to continue to go higher, or that ratio since history of 8.5% year over year is going to continue. I think this is a bunch of rhetoric. I think that the countries that are getting involved are not big enough to make a dent. Look at the U.S. dollar. The U.S. dollar has gone up. It was last time you and I talked, it was par, which is $1. Now it's $1.04. Okay. I mean, the U.S. is still the strongest in the world. My concern and everybody's concern should be that we give up that strength and go into globalism. Okay. We want to remain the strongest. Okay. As far as I'm concerned, the United States should become an island, because we don't need anybody else to survive. We have everything we need right here in this country, and we could actually build a wall around the entire country. But again, that's obviously not what we're going to do. But we have the capability and the ingenuity to survive forever if we would let these free markets trade and get rid of the politicians on both sides of the aisle that are continuing to really steal our money through the tax base and the way that they do things. Because of course, inflation, when they tax you through inflation, you don't realize it. But again, all you have to do is look at any of your utility bills. There's a federal excise tax in every bill you pay. So whether you're paying it or the supplier's paying it, somebody's paying into the federal coffers, and they're just throwing our money away. I mean, the world is about $100 trillion in debt. Where's that money going to come from? And again, if we go into this globalism, then the free market system is over, and we're just all one big communist country or one big communist world. Well, listen, again, this goes back to the Civil War comment. I mean, you could see states like Florida, Texas, and Nevada, and those states that are non-tax states want to try to secede from the union, because again, you've got some major issues, and we don't want it. If you have the ability to earn money and you have the ability to make a living, I mean, you don't want this sovereignty taken away. You don't want globalism. We don't want all these things. I don't want to be part of Russia or China or any of the communist countries in the world. I mean, listen, for me, it's not that big a deal one way or the other, because I won't be here that long. But at the end of the day, for my kids, for my grandchildren, for your kids, your grandchildren, this is a disaster. If they get through this and get this to be what they want, which is globalism, this will be the end of the world as we know it. And we'll be basically back into being serfs for everybody.
As gold remains stable around the $2,740 mark and silver hovers just above $33.50, the precious metals market is poised for potential movements influenced by upcoming economic data and Federal Reserve decisions. With anticipation building around rate cuts and their implications for market dynamics, investors closely monitor price resistance levels and broader economic indicators. The interplay between precious metals and stock performance, particularly in the technology sector, adds further complexity to the investment landscape, highlighting the importance of strategic positioning amid evolving market conditions. How do you anticipate the Federal Reserve's upcoming decisions will influence the trends in gold and silver prices soon? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.